YieldMax ETFs is a company that's no stranger to my channel, as I talk about them and their ever-growing lineup of dividend funds on a regular basis. Since I first started covering this company in early 2023, they've gone from having just 3 ETFs to now over 50. It's very clear that this company has been very successful at attracting a lot of investors, and we all know the reason why. It's because of those insane dividend distributions that these ETFs tout. And since 2023, many people, including myself, have been skeptical of their ETFs. The reason for that is because many of their ETFs have suffered from long-term NAV erosion over time. At first glance, the YieldMax Ultra Option Income Strategy ETF, ticker ULTY, might appear to be no different than any other YieldMax fund in this company's lineup. According to their website, it's currently offering a distribution yield of well over 80%, just like many of their other ETFs. Since being launched in February of 2024, ULTY has reported a share price decline of nearly 70%. That sounds really terrible to any buy and hold long-term investor like myself. And pulling up its share price chart, we can clearly see its dramatic fall over time. But that's not the only thing that's evident when looking at the share price performance of ULTY. Since late March of this year, we can clearly see that something else has been going on with this ETF. The dramatic share price decline has basically flatlined, and this fund's share price has been significantly more stable over the past 4 months. The reason for this is because in late March, YieldMax actually made some big changes to ULTY's strategy, which appeared to have stopped its rapid decline. This change in strategy not only has appeared to have resulted in a more stable share price, but it's also been attracting a lot of investors like crazy since June of this year. According to ETF Database, inflows into ULTY have been exploding, with this fund attracting hundreds of millions of dollars every single week. This new strategy that was implemented by YieldMax has been a big hit with income investors, and it's quickly becoming this company's most popular ETF. In just a few months, it'll likely dethrone Misty as YieldMax's most popular fund. And when you go on websites like The Motley Fool and Seeking Alpha, every single article that's been published on ULTY has been critical of its performance because of its total return since the fund's inception. But this is not fair because ULTY is a much different fund than it was when it first went live. So in this video, in light of its more stabilized share price, we need to take a fair and objective look at this fund now and see how it's done since YieldMax implemented these changes. For those who have been concerned about NAV erosion with these YieldMax funds, are things actually going to be much better going forward? Let's take a look at how this ETF functions. In its prospectus, we can see it functions like most of their other funds. It seeks current income first and then capital appreciation. It uses option strategies on a portfolio of equity securities, which will result in limited upside potential. When it comes to picking securities to go inside of this ETF, what the managers care about most is picking stocks with a high amount of implied volatility. It's a measure of how much the market believes the price of a stock will move in the future. It's often used to price options contracts when high implied volatility results in options with higher premiums and vice versa. You can search the internet for stocks that have a high amount of implied volatility. There's several websites out there that list stocks based upon this metric. Just by searching this page, we can see that every stock that's currently inside of ULTY is on this page. Their prospectus says, generally the advisor will seek to invest in securities with higher implied volatility. Higher implied volatility typically correlates with increased options premiums, allowing the fund to generate income from its portfolio of option strategies. The advisor also analyzes significant upcoming events related to, where applicable, the issuers of the underlying securities, such as earnings releases, as well as the trading volumes of such securities and their related options contracts. The fund is generally unconstrained, and therefore, the underlying securities can be of any market capitalization size and represent any industry sector. So what are these big changes that were implemented back in late March? One of the biggest changes is that the ETF no longer uses a synthetic covered call strategy alone. For those who might not be too familiar with what a synthetic strategy is, it basically means the ETF doesn't actually hold the underlying security that it's exposed to. Instead, the fund managers attempt to replicate the share price movements using various option strategies. Funds that only use a synthetic strategy are often much more volatile. But now, following the changes that YieldMax made, ULTY now actually owns the underlying securities. Since they did this, it appears to have led to much more stability in its share price. The second major change that was implemented is that ULTY now uses something called a collar option strategy. A collar is an option strategy that's specifically used to protect against large losses in its share price. It involves buying a downside put and selling an upside call to protect against very big losses. At the same time, though, it also largely limits increases, so that trade-off does exist when using a collar. And then finally, as we're all aware, ULTY now pays weekly dividends instead of monthly. Every single Friday, it pays distributions to its investors, which has made it much more appealing. We can compare the returns of this fund since inception and after the changes were made. Using a dividend reinvestment calculator, we can see that since ULTY was launched, it's delivered a 16.55% total return with dividends reinvested. That's over the course of almost a year and a half. And as you'll notice, it was in the red for the vast majority of that time. But now let's see how it's been doing since these changes went into effect. From April 1st until now, its total return has been 32.37%. This is all because the share price has been mostly flat and ULTY has been paying those dividends. And again, this ETF currently touts a yield of well over 80%. So all of this does look really good so far, but we need to look a little deeper. Now let's talk about the holdings that are inside of ULTY. Some websites like Seeking Alpha claim that there are over 100 positions inside of this ETF, but this is not accurate. If we download the official list of ULTY's holdings, we can see that there are multiple lines that revolve around the same stock. These other lines represent option strategies that are being used on the stocks. In reality, as of the making of this video, ULTY is exposed to just 22 positions. Furthermore, roughly 77% of its holdings are either tech, fintech, or crypto-related companies. That's obviously not great diversification, and despite the fact that this ETF can even hold other ETFs and closed-end funds, it currently doesn't hold any of these. These three sectors have been exploding in popularity in 2025, and many of ULTY's holdings have been soaring much higher than the market. Nebius, for example, is currently up over 250% since ULTY's strategy change. Robinhood is up 175% since this fund was updated too. Oklo is up 248%, and Coinbase is up 78%. In our current market, picking stocks with very high volatility has been excellent for this ETF. Given how much its holdings have soared in the last 4 months, it's very clear that we just haven't yet seen ULTY's holdings go through a serious decline since they changed their strategy. It's abundantly clear we can see how its collar strategy has prohibited its share price growth. With so many of its holdings up 100 and 200%, it is disappointing ULTY hasn't surged at least a little bit in share price, but obviously you don't invest in this fund for share price growth, it's all about income with this. So the question we don't yet know the answer to is, how will its collar strategy do when its holdings fall hard, like when there's a market correction? Judging by comments made by YieldMax investors on Reddit, many people don't actually buy and hold these ETFs for very long periods of time. Most will swap in and out of them as they see fit. Swapping in and out of positions is something that I don't like to do. I will do it if it looks like a dividend cut is coming with one of my holdings, but my goal is to not have to regularly move my holdings around. I also noticed the amount of return of capital in its distributions appear to have been falling. The high amount of ROC has been another big concern for a lot of investors, and I remember historically it wasn't unusual to see it make up over 90% of its distribution. So I was pleasantly surprised to notice that ROC only made up about 40% of its latest distribution. Regardless, I do applaud YieldMax for making changes to this ETF, which it did need. I'm still not a fan of most of their ETFs, but ULTY, in my opinion, is their most appealing choice. I'm waiting to see how ULTY will do when its tech and crypto holdings see sizable declines, because these companies will not keep growing by 100% every 6 months forever. That's the ultimate test in regards to its new strategy for me to consider investing in ULTY. If you are considering this ETF for yourself, my advice would be to keep it a small position in your portfolio. Given how the distributions change from one month to the next, I'm still going to say that you shouldn't rely on a holding like this to be your main source of retirement income. But let me know what you guys think. If you're not a YieldMax fan, do you think these funds are at least getting any better? Or do you think they should still be avoided? If you do like YieldMax, are you encouraged by the changes they made? Let me know your thoughts in the comments, but with that being said, that's going to wrap up today's video. If you'd like to connect with me and see what's inside of my own high-yielding dividend portfolio, then feel free to check me out over on Patreon. You'll be notified when I make trades, and you'll get access to our Discord with other high-yielding investors. Thanks again for watching. Please be sure to like this video and subscribe if you want more high-yielding investment content. Thanks again for watching, and I hope you all have a great day.